So it might be time to finally unbox these next week, because today we had the final announcements of the Q1 deliveries by Tesla. Not only that, we already had the Q1 announcements of the deliveries for NIO. So in this video, I'm going to talk through the numbers, tell you what it means. I'm also giving you my views whether or not I think this will help the stock price or what to expect, and also give you an outlook into the coming months. So as always, if you appreciate the information that I put together, please smash the like button, and then we dive straight into the new numbers. Now first, the Q1 2020 Tesla numbers. They delivered 184,800 cars, saw a strong demand for Model Y in China, and these numbers are even without the production of the Model S and the Model X, which they now said they are starting to ramp now the production of the new models, the new Model S and the new Model X. So these are the numbers for Tesla, blowing expectation. Actually, Wall Street estimates are around 172,000, and quite a few people, for instance on Tesla Twitter, have been quite bearish about Q1, so the expectations were quite low, and this is definitely, well, a big blow to all of the expectations around there. Now let's look at NIO. And NIO also provided a March and first quarter delivery update, and NIO delivered 7,257 vehicles in March. So that's a huge increase because, of course, last year was the lockdown period, and so it's more than 370% up year over year. And in total, they delivered more than 20,000 vehicles in the 3 months ended. Also a big fat increase of 423% year over year. So also on NIO's side, this was a very positive surprise because they just had to lower their guidance for this quarter because of the chip shortage. And after the new guidance went out, I also made my video on that, then the stock price was quite under pressure. And of course, this was because of fear whether or not NIO would deliver maybe only 19,000 cars this quarter, and thereby, well, be below the expectations that investors had previously. So what are my views now on the Q1 deliveries, and what does it mean for the companies going forward, and also for the stock price possibly? Now for both NIO and Tesla, it means that they have achieved something extraordinary, which means they managed to grow from Q4 to Q1. And this is something really rare in automotive industry. Let's look at Tesla here. So as you can see here, if you look at the previous Q1 numbers, they usually have been much lower than the Q4 numbers here. So that was the case in 2019. The first quarter was lower than Q4 in 2018. Also, the Q1 in 2020 was lower than the Q4 in 2019. And now this time, Q1 of 2021 is actually higher than the Q4 in 2020. Now, I pointed out that this might be the case actually for NIO and said that in China, NIO might be the only one who's growing Q1 over Q4. So back then, with my estimations that they deliver slightly more than 20,000 cars, clearly you can see that this was actually the case. For Tesla, we still don't know it because Tesla in the delivery reports doesn't split up between the different areas where they deliver. I think given the blow of the expectations right now, it may be actually the case that they managed to grow slightly over the Q4 numbers in China. I need to verify that as soon as I get the license registrations confirmed. But for now, we can only say with certainty that the Q1 numbers for NIO were the ones who beat actually the Q4 numbers. And this, guys, is a very strong signal in my point of view, and should give us as investors actually quite a good relaxation now about the Q1 financials also, because as I mentioned before, Q1 is actually the quarter where we should have the least expectations. Actually, Q2 might be an issue as well. But with such a big Q1 for both Tesla and NIO, I think there's reason to believe that this EV revolution is really not stopping anytime soon. There is obviously a huge demand. Both of the car companies have been affected by the chip shortage. NIO's production was down for about 5 days. And for Tesla, I have also some rumors that even the Tesla Shanghai Gigafactory was down for some time. So despite that, they still managed to grow over the last quarter. And that is really a strong demand and rebound, at least in China for NIO, but for Tesla even on a global scale. So it was quite to be expected that we would have lots of fear and doubt and uncertainty around NIO and Tesla during the Q1. But what we can clearly see also on this chart here, for instance, how NIO compares to the premium German automotive brands and their pure electric battery vehicle cells, you can clearly see why investors are placing such big bets on the companies like NIO, because clearly they are the ones who are currently conquering this new growing market of electric vehicle sales. And once again, if you compare Tesla to NIO, Tesla definitely is the leader in terms of scale and output, but NIO here as a new car brand can actually compete even with the German premium brands when it comes to electric vehicles output. So with all this good news out, what does it mean for Q2 and the coming months after, as well as for the stock price? Well, first off, I'd like still to be cautious about the Q2 because we still have the chip shortage going on, and Q2 is seasonally still a lower quarter on a yearly scale, but we should actually expect also a growth from Q1 to Q2. So from now on, it's quite certain actually that we should see growth from Q1 to Q2 and Q2 to Q3 and so on. So we're almost out of the danger zone, so to speak. But still, with NIO, for instance, I'd like to have more clarification in the next earnings call by the management team, how the chip and the battery supply is actually constraining them in growing. But now with the stronger Q1 numbers already out, despite all of these issues out there, I would actually be confident and say that, now we should rather look to the 100,000 cars produced by NIO rather than my initial estimation, which is quite conservative, of around only 85,000 per year. The only thing about these new numbers, which concerns me a little bit, if I go to my Excel here where I track all of the sales and so on, is that the daily rate, so the cars delivered per day in the month for the work days that were available, has dropped a little bit for NIO to around 234 compared. So that's similar to the January deliveries per day. February was actually up if you subtract all of the days that have been off because of the Chinese New Year. So that might be something to watch, whether or not this number can actually continue growing, this daily delivery rate, as it actually should. And another important metric connected to that to watch is actually the production rate. And I think that is now actually quite close to full capacity for 2021. So close to the 150,000 annual capacity. Right now should be around 400 cars produced per day, per workday. And that will be close to 10,000 cars produced per month. And I'm hearing rumors that are actually trying to ramp this up to 300,000 annual capacity in this current plant for the end of 2021. So that would be the double shift and the full capacity actually for the next year then to follow. So now as always the big question, will this help the stock price or not? Well, I think, as I always say, be cautious about Q1 and Q2. I don't have big expectations. Actually, it was quite clear that we will have this negative sentiment with the share price during those quarters. Now that the positive news is actually that they have exceeded the expectations and it hasn't been as bad as some initially thought, that's obviously good, but it doesn't necessarily help the stock price. For instance, we saw now also yesterday with the close of NIO that, so in the beginning in pre-market, NIO was up around 8%. But through the day, all of those gains actually went down and we closed closely to around 2%. And that was obviously what investors didn't hope for such kind of good news around the deliveries, right? And maybe the same thing could actually happen to Tesla when the stock markets opened again after those bullish delivery numbers. Maybe the stock price has an initial spike and then actually also gradually finds back a little bit and gives back some of these gains. Because the truth is just that the stocks had this huge rise in the share prices in the last months. So lots of this news is actually already anticipated in the stock price, and only a miss would have actually made the stock even come back down further. But now also looking into the next coming months, this also means that now that the company is actually showing that they can execute on those big expectations and also those growth numbers that they're actually getting delivered, that should be good for the stock. And I expect that with Q3 and Q4, then these share prices should actually be hopefully increasing once again when also this big shift from tech to value is finally over. We still have the uncertainty around the economy opening up, and in NIO's case, also the uncertainty around the US and China relations. So that's still depressing the stock price for now. And I don't expect this to actually finish quite soonish because, for instance, there's now news that more people have actually found jobs in the US than anticipated. And that's also maybe another fear adding up to this inflation fear may trigger more bond sell-off and thereby rising yields in the bond prices. And that once again is bad for the stock prices, both for NIO as well as for Tesla. On the other hand, let's also be positive on the short term. So with this big beat of Tesla, I can actually imagine that, well, this could actually be good for all of the EV stocks in general, because of course Tesla for now is the benchmark. And as I said in the very beginning, it's a big sign that the EV revolution cannot be stopped. There is big demand for it, and these companies are actually executing on their plans. So yes, if Tesla, for instance, has even a higher stock price next week, that could actually be good for NIO as well. And also to give you another optimistic outlook, this is something that I posted in the Patreon community, and that's the NASDAQ 100 index seasonality, where you can clearly see that in February and March, you usually will have on average, so this is, I think, the last 20 years, where actually NASDAQ underperforms, and then from April actually into May has this rise in stocks in general that are listed in the NASDAQ. So the current shift from tech into value could actually have something to do with the seasonality, but also, of course, is actually good for the markets to broaden out, so that also not only tech is in a bubble and going up there, but also in general the markets are catching up and rising from here, hopefully. So yes, there are things to look at more conservatively in the next coming months and weeks, but I think ultimately at Q3 and Q4, when all of the fear has worked out around negative or bad delivery numbers, about chip shortages and about stock rotation, and in general whether or not there is a bubble in both tech as well as the EV, when all of those things have worked out, I expect both Tesla and NIO to recover. So as always, do let me know in the comments what you think about these delivery numbers, and then as always, looking forward to give you the best information on Chinese tech, on the EV part in specific, and more stocks to pick in 2021.